I remember 43.50 we were shorting. So yeah, look at that, 43.49. So let's take that off. I mean, that's not one you want to let go away. Well, now we're done. Okay. Oh, for the day too. That doesn't tell you how much you made on the total trade, but that's okay. It was a good amount of money. So you know, you don't let something like that keep going. That was a crazy run. So anyways, that's nice. So I made a few $1,000 from the last webinar. Well, obviously, I mean, that would have been 2,000 per contract, 43.50 to I'm sorry. So 43.50 up here to 41.50 is 2,000. So it's a little bit less than 2,000 per contract. That's very nice. And you know, look, you don't always want to leave something on like that, but in this case, we were very confident in it. Like here, I'd be very confident shorting the Dow up here. Very confident 124.50 on the NASDAQ is crazy. 125 is even crazier though. You know, oil was fundamentally a problem. Now, what happened to oil today is that, well, we can go look at the report. Let's go find that report. Petroleum status. That doesn't look updated. Date. August 21st. I knew it. Bastards. They're so slow with the updates on these things. Oh, well. So, you know, last week there was a draw of 10 million barrels. This week, though, they had a hurricane. Remember, the hurricane shut down the production, and of course the holiday demand. And there was still a draw of about 10 million barrels. So it's not enough of a draw. It's no better of a draw than we had last week coming into the holiday, and that freaked out the oil traders, and they started selling everything off. So let's go back to this. So they did this from the 10:30 report. They were already selling off anyway, but API wasn't good. And then the 10:30 report was the last straw, and it just went crashing down from there. You know, like I said last week, I would have been very happy to hold it through the holiday, but it's such a, you know, it's, I mean, when you make $2,000 like that per contract, it's like, take it off the table, for God's sake. You know, it's like, hey, you should not expect to make that. If you make $500 in a futures trade, you should be thrilled and take it off the table, or at least be looking to take it off the table. Now, since it's a holiday, oh, look what we just missed. Since it's a holiday, I was going to say we could go long gasoline, because people will just buy gasoline futures into a holiday regardless. And so that then is another trade where you can just pick it up and walk away, because people will run gasoline up regardless of the fundamentals. So unfortunately, it's already getting away, but let's take a little shot at it just to remember to talk about it next week. So in that case, it's RB. So again, because remember last week we had a nice spike. So this week we don't have a nice spike. I'm just going to buy one. That still says 120. I wonder which one is right. No, that's shorting side. Didn't want to short. Oh, all right. 12085. Okay, that's fine. So we're a little bit under 120. If it goes down again, but the thing is, I'm fundamentally playing this. So if it goes down here, I'll be very happy to double down and average 120. I got no problem with that at all. I'm only doing one. I don't have a 1,000,000,000% confidence or anything like that, but we'll see how it goes. So, and again, we're just playing the fundamentals. I know that going into a and I'm sorry, we're not playing the fund. Well, everything is fundamentals. The fundamentals are that traders will manipulate the price of gasoline into a holiday weekend to jack it up so that people pay more at the pump. And they do it reflexively. So even though this is not a typical holiday weekend, they're still going to jack the prices up anyway. So I expect it's very likely they will push up the price of oil. Also today, the dollar came back quite a bit. The dollar's at 92.73. You'll see that better on the futures charts. It got a little squishy from the bad reading on the chart, so that'll squished up. But look at the dollar bouncing, right? It's up tremendously. It's up 1% from yesterday. And we talked about that. Oh, when did we talk about that? I talked about doing an up play because I said the dollar was going to bottom out soon, and it was fun to play up for it, the dollar bottom out. And why? Because the euro is just as bad as a dollar, and the yen is just as bad as a dollar. And although the dollar is terrible, and we're printing money like crazy, other people are catching up. So you know, a lot of people are saying, oh, the dollar's going to go down. As soon as I heard Goldman Sachs say the dollar's going to go down 20% more, 10% more, I'm like, okay, that's the end of that. Because they are horrifying liars, those guys. They just basically, they tell their private clients one thing and the rest of the world something else. Ooh, look at cattle. Holy cow. You want to, when you're trolling for a play, though, you want to use longer term charts, right? Because it looks bad, but it's really over here. It could actually collapse and be terrible. Grains, who cares? Grains. Whoa, what happened to rice? That's an interesting story, I bet. Look at that. That's interesting. Not that I even play rice, but kind of curious. Holy cow. Well, it had some crazy spike. The story is more of the crazy spike than everything else. But there was a crazy spike up, and then it went down. But you know, like I said, never play rice, so weird. Corn, I never play corn. It's the weirdest commodity. I used to try to play it, and it was horrible. You just can't possibly have the right information to play corn. Okay, so metals. How's gold looking and everything? Gold's chugging along, still in that range around 2,000. Silver's plowing ahead. Everybody else to get copper, $3. Holy cow. You would think there's like a booming economy somewhere. Coffee. Oh, coffee's on a tear. Look at coffee go. And when we used to buy it down here, orange juice down in the dumps. Lumber. Oh, lumber finally came off its highs. Lumber was going crazy. Bonds are all over the place. Energy, we talked about that. I mean, there's our top, 43.50 right here. That was easy money, shorting at 43.50. Now gasoline, why are we long? Look at this line at 120. Look at that good support there, right? Not 1,000,000%, but look at July 4th, right? What happened July 4th? Whoa, went from 115 to 130. That is some serious money. That's what we're playing for, that kind of move. And I'm not saying it's definitely going to happen. I'm just saying that's what can happen into a holiday. So it's like a roulette. It's like a bet. It's 50-50. You're going to win or lose. You want to stop out below the 120 line, so you can't lose more than $300-400, but you could win $2,000 or $3,000. And it's basically a 50-50 bet. It's like you don't know if it's going to go up or down, but if it goes up, it could go up a lot more than before you stop out when it goes down. And natural gas got a little boost from the hurricane, but not much. And now it's going to come. That hurricane didn't have much effect, I guess, overall. Wow, the Dow's at 300. Holy cow. Look at that. Look at these freaking indexes. That is unbelievable. Look at this thing. How fake is that? It just never goes down. It just goes up every single day, basically. No one ever thinks of selling NASDAQ, not in the month of August. Anyway, wow. Wow, wow, wow. How does it look weekly? Look at that weekly chart. Jesus. That's crazy. All right, well, there you have it. All right, zinc, a supplement, not sure about tea. Oh, okay. Well, there you go. You go. See, good stuff. Sound gone. Brian, and back. Brian, I think that's you. U.S. focused cannabis ETF set to launch New York Stock Exchange, blah, blah, blah. Oh, well, I mean, I guess if you're saying, oh, they won't have those Canadian companies, but there's nothing wrong with the Canadian companies except that they overextended when they started. Um, what's that one we play? MJ. We play the MJ ETF. Where's my stock charts? I lost stock charts. Really? No, you're not stock charts. You're not stock charts. None of you guys are stock charts. Twitter, Yahoo. Seriously? Yahoo. Who is psyched about sending their kids back to school? All right. MJ, that's right. I love that MJ ETF. We have that in the portfolio. It's not doing well. Holy cow. I mean, it was way down here. So fortunately, we kept with it. And now it's coming back. And I guess it's probably consolidating down here. And it's probably going to break up eventually. You got to look at the components. So look, when you're playing an ETF, you really want to see what am I buying? So you go to the MJ ETF. And you wait, and you wait, and you wait, and you wait. And you wait some more. Holy cow. What is this? My connection? It seems odd. That's taking way too long. What's out with you? That cannot be right. No, you're not. That was not Yahoo Finance. See, that one came up right away, right? So it's something wrong with Yahoo. Which we were just looking at this really interesting thing about, who used to dominate the internet space back in the days and who's dominating now. And it's so weird to see how Yahoo used to be like the totally dominant force in the universe, and billions of people logging in every single month, and like Facebook is now. Like pretty much everyone on Earth uses it, and now they're an also ran. I still use them for finance. I still like Yahoo Finance. I mean, it's not great, but it just has everything like right where you want. It's very intuitive. Um, wow, I don't even know if I want to do this again. It's so slow. Seriously? What is wrong with that? All right, well, I guess we'll get back to it later. What was I even, what were we even talking about? Oh yeah, components. That was right. That's here, let's see. Here's why people use Google instead of Yahoo. Components of MJ ETF. There you go. So the number one component is Aurora cannabis. This is why Yahoo is totally useless at this point. It's just, I mean, Google kicked their asses for a good reason. So Aurora Cannabis, who we actually separately buy, we think they're one of the best ones, and they're 7% Canopy, Tilray, Kronos, GW is another good one. Corvus, Hexco. So these are all, none of these are objectionable. That's the thing. And that's a good thing. I wonder how Trulieve is doing. Wow, seriously? Oh, look, it's working. So their assets are they've only got 550 million in net assets, and they own 7% of ACB. So as an example, so ACB, I'm sorry, they don't own 7% of ACB. ACB is 7% of their portfolio, is a more accurate way to put it. So if they're $550 million ETF, then 7% of 550 million, which is like 35 million, $40 million. That's how much ACB stock they have. So you have to think in those terms, and you have to say, okay, well, so ACB, stop using that because it's so bad. So ACB, that's why you got to look at each component, and you have to say to yourself, okay, well, Aurora Cannabis is way down here at $8 or whatever it is. Okay, so it's $8. So if it ever does stop spinning, we could talk about the valuation of it. But so if Aurora turns around and goes back to, let's say it goes back to $24, right? Just to pick, so 27. So let's say it goes back to 27, so it goes up 3 times, right? So what's that going to add? It's adding 21, so it's adding 300%. So it's going to add the same 21. So it's 7% of the holdings of the MJ ETF. So it's going to add 3 times 300% of 7% or 21% to the entire ETF. So if a 7% component goes up 300%, it's going to add 21% to the overall ETF. And that would take MJ from 12 to not much. I mean, it's going to add 240, so it's going to go to like 15 maybe. But that's still a pretty good move. I mean, you're going to go from 12 to 15. That means you can make some really good money betting the MJ ETF to go higher. So that's the key. What you do if you're investing in an ETF is you have to think about the dynamics of the components. And you say, I'm buying these components, and you look at the top 10 components. Oh, what was that? For God's sake. What did I just say? Search. Component. Oh, there you go. Thank you. Look how great Google is. You remember that I said that. So basically, more items. You can look at the whole thing, I guess. Where did you get that list from? Wow. Oh, here we go. Okay. So canopy 7%, blah, 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 blah. So, you know, you look and say, it's first of all, good ETF because it's more diversified. I don't like ETFs that are very heavy on one thing or another. 7, 7, 7, 6, 6, 5, 4. That's not a bad ratio, actually. It's not terrible that it does it. It does it like that. They're only 550 million though. So that means if it says 7% of the holdings are canopy, then you take 7% of 500 million, which is like $35 million. So that's all they own. But that's irrelevant. What matters is, so if Aurora, we look at, so if Aurora were to double, then Aurora would add 7% to the entire thing. Now, of course, that would mean also you have to think that canopy is not going to go lower, Tilray won't go lower. But what you do is you assign your target price or target movement to each of these items. So I say, let's say I say canopy 10% easily. Aurora, I think should go up at least 100%. Tilray should go up 25%. Chronos should be at least up 10%. GW up 20%. Corvus up 10%. So I look at these things, I say, okay, good, each one of these, and I can actually tell you my target number by adding all that up. If I sat there and did it one by one by one, I could tell you exactly what I expect to happen with this ETF. And because I'm spreading my risk, I'm not necessarily going to be killed by one thing. That's why we like the MJ ETF. The other thing we like about the MJ ETF is it has insane options margins. Let's go MJ. So it is a it's a $12.32 ETF. It has options all the way out till 2022, and you can. Now, meanwhile, I will tell you, we've not done well on this. It's gone down a lot since we bought it, but I still like it long term. But the main reason is because, look, I can I can buy the stock for 12 and I could sell the $12 calls for 3, so my net would be 9, and I could sell the $12 puts for 3, and that would make my net 6. But it would be 6, and then we would be assigned another set at 12, and that would give us a net of 9. So our worst case scenario, if we wanted to do it like that, buy the stock for 12, sell the $12 puts and calls for $6. That knocks our basis down to $6, gives us 100% return if we get called away at 12, which is the current price. And that, by the way, is one of the great things about options, right? I'm setting up a trade where, in the simplest of terms, buying the stock for 12, selling these calls for 12, the $12 calls, selling those calls for 3, and then selling $12 puts for 3. And by the way, they're both a little bit higher than 3 probably. But either way, the stock's a little higher than 12 too. But conceptually, your average, that drives your cost basis down to $6 on the 1x, on the one amount of stock that you sell. If you get assigned, you would be assigned at 12, and you would then own the new set for 12, 1x at 12, and 1x at net 6, because you sold and got this cash. So now you're 9. So your worst case scenario is owning 2 times the stock at 9 than you start out with. That's your worst case. Your best case scenario is 100% gain, even if it just stays flat and goes nowhere. So I make 100% if the stock stays flat or up at all, and I get a 25% discount if the stock goes lower. That's what you're doing with options. So what reason would you have to buy the stock? The only thing and of course you're going to say, well, what if it goes way up? Then I'm going to miss out. Too bad. 100% gain in 18 months is fine. Nobody makes that kind of money. Warren Buffett doesn't make that kind of money. Only Elon Musk makes that kind of money because he mostly owns his own stock. But nobody over any long period of time makes 100% per 18 months. That's just astronomical amounts of money. So if you can make something like that and you have a pretty good confidence that it's going to happen, take it. That's a great way to trade. Now, as an alternative, we can be more conservative, and instead of wanting to be assigned 2x, let's say we're willing to go in at 9, but we only want 1x. So then that's our premise. So we say this is maybe 160, let's call it, because it's in between the two. So we sell those for 160. Now we have $1.60 to play with, and it's the same kind of thing though. We take the spread, which is what's this, 4.6, let's say 4.50, and the 12s are $3, so that's $1.50. So in other words, you could then take the, the 9. You could take the 9-12 spread for $1.50. You sell the $9 puts for $1.50 or more. That means the cost of your spread is 0. You make $3, not double, but you're doing half the trade that way. You make $3. If that actually, if you do, actually, it's not enough money, frankly, I'll tell you the truth. It's not enough money because you could just sell the $12 puts for $3 and you're gonna make the same $3. And if you're assigned, you'd be assigned to the same 9. Right? So it's another way to do it, but in this case, it doesn't make any sense because you're not gaining anything. There's nothing special. The only difference is maybe if you want to be fancy about it, let's say you do 20 of these spreads, and we do the 9-12 spread for $1.50. We sell the 9 puts for $1.50, so that's 20 short puts, 20 long spreads. But then we go and sell 5 October, let's say 13s for 50 cents or 60 cents or whatever. That's another $250. And if you do that that's 44 days. You do that every 44 days and you have 506 days to sell. That's more than 10 times. So you could pick up you could pay off $2,500 in additional profit selling short calls. But the problem is with the marijuana ETF is it's very volatile and could burn you. So you'd have to keep tight stops on it. But again, ETFs don't generally move the way that a stock will move against you. It's not usually going to drag everything else with it. MSOS, Randy says, is a marijuana company. Little info on their first trading day. Actually, my favorite is Trulieve is my favorite U.S. company. I'm not sure where the stock price is at now, but TCNNF. Wow, I can't believe I remember that. Amazing. You know, just when you think you're losing your mind, comes right back. TCNNF. It's in there somewhere, right? I remember when my grandma was going senile. It's like weird that she would suddenly, like, things would suddenly be accessible. And you just kind of think of it like a hard drive failure, you know? It's like it's in there. The data's there. It's just she can't get at it, which is weird. I don't know if I've had time to get into it. Just study the subject. All right. Anyway, unfortunately, this is the one I kept telling everybody was crazy low when it was down here. They had legal hassles. They had all kinds of problems. It wasn't her fault. It wasn't Kim's fault, who's the CEO. Her husband got in trouble for some stuff he shouldn't have been doing. And the FBI investigated the whole company, but it turned out they didn't do anything wrong. It was just him. And what he did wasn't that bad, actually. It was just, you know, they just basically were investigating him because they were a pot company. I think was the main reason they were looking at him so closely. It was a real estate thing. The real estate the real estate stuff he did mixed up with the pot company a little bit, and it was sort of inappropriate. But, you know, really, she's just like, well, my husband's in real estate. He can get us, he can find us some properties. And it was sort of a nepotism, didn't get the low bid kind of deal. But, you know, honestly, it was not as big of a deal as it made it out to be. And we talked about it at the time, because when they were down here, I was like, you guys got to buy this. This FBI thing's idiotic. And it turned out to be, of course, it still had a scare in March, and they went right back down. But then now they're like miles ahead, so they're all back on track. This is a fantastic company, though. Dare we look at Yahoo? No, we don't. Look, they screwed up. They're not even in the right thing. They want me to look for Jennifer Aniston and Journey Small. I don't even know who that is. Shit, am I out of touch? Do I not know what the kids are doing? TCNNF. Whoa, it is Yahoo. Yahoo's like super slow today. Holy crap. It's unusable. Oh, well. So my point was going to be that they're a good company. They make good money. Hang on. I got that guy. Yeah, there you go. Oh, look, there's already a T. How efficient. TCNNF. Nope, you didn't like that? Nope, doesn't like that. TCNN. Oh, interesting. Got anything? Because it only does big stocks. That is the correct spelling. Seriously, Yahoo? What's weird that stock charts has it, but nobody else does. Oh yeah, oil. All right. Fine, on to another subject. Anyway, I like that company. Okay, here we go. August 28th. That's the right one. Should we even read it? So crude oil down by 10 million barrels. Gasoline by 4.3, and distillates down by 1.7. So you're looking at a pretty good draw. It's 9.4, 10, 14, 15 and a half, basically. It's a good draw, but because the refineries were closed, it's certainly not what they expected. Look at our refinery capacity utilization, 80%. Tons of exports. How did we export that much if the shipping channel was closed? That's crazy. On the whole, you can see 85 to 76. So really, where's the other oils? You see the build in other oils from 509 to 17, they hit it. See, that's what they do. When they want to give you the impression there's a big draw, they'll create a lot of these other oils. They're not included. It's not gasoline, it's not distillates, it's other oils. They don't count that in the report, they don't headline it. Therefore, they can manipulate these numbers by manipulating how much other oil the refineries produce, and that then gives the traders the impression, if they don't read the report properly, gives you the impression that there's more of a demand than there really is. And that is what they do. One of the manipulations they do into a holiday is this: they dump 8 million barrels. They dump 8 million barrels into other oils. So this number was 50% bullshit, and it really only went from 85 to 76. You really only had a 9 million barrel draw overall, not the 15 million plus barrel draw that's headlining. And that's why oil plunged so much, because traders, the NYMEX traders, know how to read the report. Okay, the regular retail people are just, you know, idiots trading oil, and they don't understand, and they don't read the report properly. They just look at the headline and react to that. So that there's the story there. So the whole story of why oil is crashing is because the reality is they had to fake 8 million barrels of demand by shifting inventory to all other oils. And I don't mean they physically changed one thing to the other. What they did is this week in their production run here, they made a lot of all other oils. So the refineries do that. And believe me, they're in cahoots. They're all like, this is a coordinated effort to do these things, to manipulate the markets and make it seem that way. And why not? I mean, OPEC's in cahoots, except they're open about it. We're not open about it. We do it secretly. For some reason, Trump and Biden are both on the screen at the same time. And the headline's about China. I wonder what's going on. Derek Burney, former Canada ambassador to the U.S. That's weird. We need an ambassador from Canada. It's like getting an ambassador from New York. I guess that's what a governor is. Anywho, all right. So this is all nonsense. Nobody cares. But that's why oil's crashing. Oil's crashing because the entire EIA report, the EIA headline report is fake, and that's and the traders know that, and they know the demand is way disappointing. And so they're dumping out now ahead of the holiday because they're all terrified that we have another one of those giant sell-off incidents like we had earlier this year. Remember that, like April? Yeah, this. That was, I mean, it was really bad, and then it got worse, and then it got much worse, and then they were paying you to take the oil for a bit. So that's what that's still terrifying. All these guys are so terrified of this happening. And look where we are too. We're right there where we gap down. You get caught in this, and you are bankrupt, or you are fired, or something. You do not want to be on the wrong end of that. Meanwhile, I just went long on gasoline. I'm sure gasoline did the same thing. Let's see. It's got the same gap. Yeah, there you go. See, gasoline has the same gap. So you do not want this to happen to you when you're holding longs, though. That's not cool. So that's why these are very dangerous trades. I'm not recommending anybody jump in on them. Gilead, says Bernie. Let's see. Do you think it's a good play at this level? Absolutely, I do. Will COVID treatment or vaccine impact it? I think not. I think that at best they're going to be one of the companies that has a vaccine. I think it'll be several companies, so nobody's going to have an exclusive. Nobody's going to make a fortune on it. Everybody's going to be forced to do their patriotic duty and just, you know, basically get these things out to the market at near cost. Like 3M with the masks. It's like 3M, demand for 3M masks is astronomical but the government's forcing them to basically make them a cost. So what's the point? Doesn't help 3M at all. In fact, it hurts 3M to some extent. But we went long on them anyway. Monkman says, what are oil traders like? How do they operate? They are like insane people who are often found in strip clubs. I don't know what you wanted me to tell you. No, there's all kinds of oil traders. I know a woman who's an oil trader, and she's a very serious person. I know some insane people who go to the strip clubs and trade oil for like an hour and then quit because they make their money for the day. There's not as much open pit trading as there used to be. So now oil traders are guys sitting at home with their computers, just running their things. But back in the day, I'm sorry, just because they don't openly act outrageously and whatever now, just because they're sitting at a computer, that doesn't mean they're not calling people up on the phone and manipulating the market. It's the same way they always did. But they would get together and they would sit down in the clubs. That's why they love these sports clubs, because no mics, nobody. One of the reasons people like going to golf clubs and sports clubs and things like that is there's no microphones, nobody's listening, everybody's off their cell phones, and they can speak and make their little backdoor deals and things. And that's what they do. They make these deals with each other. It's like, you'll buy these barrels and you'll buy these barrels and you'll buy these barrels, and we're going to jack the price up to this, and then we're all going to dump it. And they say, sure, let's do that. That's going to be our day today. That's how we're going to make our 10 million today. It's a sleazy profession. It really is. I mean, most of the people in there are manipulators, not traders. They're manipulating the markets. But again, if you look at that thing on Jim Cramer, good old Google, if we say Jim Cramer market manipulation, I don't have to type it. Jim Cramer market manipulation, this video right here. Watch that. If you don't know about this, you have to watch this. He's right. This is how the stock market is manipulated. This is when he was it's a long time ago. It has to be like almost 15 years ago or something. He was I think he was intentionally doing it. I think he wanted to be on video, but what he says is true. He's not acting. It's not bullshit. He's telling you how the markets are manipulated by hedge fund managers. It's the same thing with the energy traders. Everybody does it. All right. It's not everybody. I don't manipulate it, because I always thought that was like dangerous and wrong. Although you see so many people getting away with it, you say, why aren't I doing this? But on the other hand, I realize that I can play against the manipulation. So I recognize the manipulation, and I play against it. So that's, for me, more fun. I'd rather take the money from the manipulators and all the innocent people they're hurting when they do it. But Cramer talks in this video about how you jack up the price of something, how you create false demands, how you have your friends in the media who will write stories for you when you want to, or even people who are dupes in the media. You guys have heard me. I've talked to reporters on the phone. Like people, reporters call me all the time. Every once in a while, I pick them up in the webinar. You can say whatever you want. I mean, I can literally say whatever I want to these reporters. I can make up any kind of bullshit, and they will write it. And if you want to manipulate something, and you're a hedge fund manager, it's not that way. It's not you saying it. You just say what you want to a reporter, and they will spin it the way you want it spun, and they'll even call you to check before they write the article and say, okay, here's how I quoted you. Is that accurate? That's what they ask you. Here's how I quoted you. Is that good? And I'll be like, yeah, that's fine. But if you want to manipulate the market, give them a misimpression. Let them write something that whatever. It could be totally wrong. It's no skin off your back. They'll write blah blah blah, said Jim Cramer or such and such of actionalerts.com or whatever his thing is, and the street. And but you're stepped away from that. You can always say I was misquoted, or I didn't directly do this, or so on and so forth. And there's easy ways to do it. Somebody, people take turns taking the bullet. Like somebody's gonna, you set up a trade with your buddy, and you say, okay, this week you're gonna sell me 10 million barrels of oil at a lower price, and we're gonna knock the price down. Then we're all gonna jump in and buy it. But somebody's gonna take the hit and drop their oil price and maybe take a loss. And then if three of his buddies are going to catch up and make money on loss. But then next week, those 3 guys are going to, one of them take a hit, and you're going to make the money. So you'll make money 3 times and lose money once. And that's what you do. You develop like a network of buddies. And it's usually 4 guys. And why is it 4 guys? Because 4 guys will go together on a golf course. And they'll be far away from anybody listening to them and talking in private. So they can make these deals on golf courses and things. What's it called? The Pines? Well, there's one in New Jersey, like that nobody knows about. It's like a secret golf course that all the brokers go to. They fly, like helicopters go in and out all the time. And it's a lovely golf course. I'm in there. It's like very exclusive. Like you cannot go unless you're invited and such. And that's what it is about. All this exclusivity and all this clubbiness and things like that. It's about secret meetings. There are people, there are really wealthy people who control everything. And they have meetings. They do have meetings, but the meetings are like golf meetings and cocktail meetings at lunch in a certain place. They like noisy restaurants so nobody's listening and things. It's crazy. I'm telling you, it's like, it's just, so that's what oil traders are like. If you want to know how they're like and how they operate just like this guy does. It's sleazy and it's backdoor stuff, and it's screwing little guys and just manipulating the markets and thinking it's a big freaking joke. And you know, there's no need for it. I mean, there's no need for the energy traders. What are you trading? Oh, where is that? NYMEX. Oh, this is this thing? Oh, maybe I got it. Google is so great. If this is the right one, I'm going to be so pleased. Yes, this is why Google kicks Yahoo's ass. Holy cow, that is amazing. All right, so oil. Here's how corrupt oil is. These are 1,000-barrel contracts, okay? So today, the total open number of contracts is 337,000 contracts, representing 337 million barrels of oil, right? 337 million. How many of those contracts were traded today? 313 million of them were traded today, so far. So far. And that's just the October contracts. There's also November, December, January, February, right? So more contracts were traded today than there are open contracts for the whole month of October. That's number one. So already you know something's wrong. Look how many contracts are being traded. 90% of the October contracts changed hands in one day. So what happened? Did 90% of the people who thought they wanted oil yesterday decide they don't want oil today? And this is not because it went down a lot today. This is a typical day on the NYMEX. This happens all the time. And so let's keep in mind this number, 337 million barrels of oil, okay? How many barrels of oil in the API report, where'd it go? Oh, in the EIA report. How many barrels of oil do we even transact in a month? Well, they make 18 million barrels total, and there's 30 days in a month. So let's see, we got 18 times 30, 540 million barrels. So the entire monthly consumption of oil in the United States of America is 530 million barrels, yet there are, where to go? Okay. So there are 330 million open contracts. That kind of makes some sense, that you want to have all the oil the country needs delivered, but they're being flipped 300,000 times. And that is just on the NYMEX. There are other exchanges that trade oil also. That's just that's just oil in the NYMEX. It's so insanely ridiculous. And you'll see that as we get close to the end of the month. By the way, there's another one way we used to track oil. When oil was more rational, you used to be able to watch this, because this indicator would tell you if the traders were in trouble, because as you get closer to the end of the month or to the end of the contract period when it expires, And if you see there's still a lot of open interest, meaning open contracts, you know that they have to do something with those contracts by the end of the month or they're going to get delivery. And so we would have like rules of thumb that we would watch. And also you would know they're in trouble if you add up the number of oil in the front 4 months and it's over $1 billion. And here you've got 4, 5, that's 5, 8, you're getting close to $1 billion here. That's pressure. When there's $1 billion barrels in the front 4 months, that tends to be pressure. And what you're going to see, another manipulative thing about the oil market, eventually by the end of the month, all these contracts will disappear. But you know where they're going to go? They're all going to be accounted for here, because all of this trading, I mean substantially all of it, barely 5% of this trading is real. And the rest is all just manipulating the markets by trading contracts back and forth. 95% of this trading is fake. So that's why when you say, what is it, tell me about an oil trader, or what do you say was, what are oil traders like? Oil traders are doing a fake thing. Their entire job is fake. Everything they do is fake. All they are doing is manipulating the markets. There is no need for these people at all. They provide, all they do is make the price of oil much higher than it should be by constantly churning these contracts. And every time they churn a contract, believe me, they're not paying the fees. Their brokerages aren't paying the fees. The consumers are paying the fees. All these expenses, all this churning, all the commissions that all these guys make are paid by you at the gas pump every week. That's where this money goes. Oil, if it wasn't for these guys, oil would be at least $10 cheaper, at least. Probably 30% cheaper. That's what they're adding to the price of oil by just churning it and trading it. And that is their job. They are paid by the energy companies to jack up the price of oil. That is their function. They're there to make oil expensive so that the energy companies make more money. And they get paid a fortune for doing it. So that's what energy traders are like. And they also like to throw money around at strip clubs. That's the other thing about them. So there's that. Gilead. How is Gilead doing? Gilead's down. I mean, Gilead's a fantastic value, I think, down here. Let's look at that. Oh, did this thing ever wake up? Oh, look at that. Came up with AT&T after all that waiting. Didn't come up with the right price, the right company. So Gilead got knocked down because they didn't quite have the cure people were hoping for, but it's a fantastic buy down here. So basically just another chance to pick up a super duper company at a great price. So I like Gilead a lot. Today, we have that new newsletter thing we're doing, and somebody asked me what they wanted to feature something, and they said, well, what do you feature? What off the top of your head do you think is a good value that we can tell the readers is going to be a value that'll last for like the rest of the month? And I said, who do I like? I like Gilead. I know that. That's one. I like Viacom, but Viacom has shot up a bit. VIAC. So I like Viacom, but they took off. That was one I banged on the table on. Oof, look at that. But it just never should have been down here. See, to me, it's like, I know it never should be. It should be 30, really. So that's about right. So 30 would be a good price then. But it's too late for Viacom. So who else do I bang the table on constantly? IMAX already took off. That's another one I bang the table on all the time, right? Tell you guys it's undervalued. Well, it's not so undervalued anymore. Okay. Some of these guys take off, and some take off fast, some take off slow. Who else do I bang the table on? WBA. Walgreens Boots Alliance. Boots is an English pharmacy chain. Walgreens is our favorite American pharmacy chain. And oh my God, look at this. All the way back to like the March lows. So knowing that, I said to these guys for the newsletter, I said, okay, let's do Walgreens. I said, frankly, I am super comfortable that somebody's going to look at an article a year from now and say, does this Phil Davis guy know what he's talking about? And they'll say, oh yeah, he picked Walgreens. What a genius. It's, oh, this thing's not going to work. I don't know why. Look at me falling this trap again. Just I have the habit of doing it. Oh my God! See, hope springs eternal. $32 billion. That's the market cap of Walgreens. All right. This PE ratio is what puts people off. They think they look at 43.61 and say, "Oh my God, this is terrible." All right. But the reality is, they were just very unlucky because they were restructuring, because they just merged with Boots. And in the middle of restructuring, they got hit by the virus. And it was a terrible time, and also, unfortunately, a critical mistake they made. Also, notice 5% dividend. The critical mistake that Walgreens made is they went to become very much like a supermarket, which is what Boots is in Europe. In Europe, Boots is like a supermarket. It's got everything you could possibly want. And they're very nice places. I used to love going to Boots when I was in England. When I was a kid, it's like I always thought Boots was like a cool, like a great store. It was really just a drugstore, but it doesn't seem like one. So Walgreens is moving to that kind of model, and it's more than a 7-Eleven, but less than a department store. But they got groceries, they got good knickknacks, home items, greeting cards, all kinds of stuff. And it's like, yeah, a lot of pharmacies have that, but I mean, that's the model they're embracing. Anyway, just when I was giving up, it comes up. So here they are making with operating income. Okay, net income, net. Anybody? Net income. All right, roughly. Jesus Christ, they make this hard. Seriously, you can't just say net income somewhere? So normalized net income, whatever you want to call it. So 4 billion, 5 billion, 4 billion, okay? Nothing wrong with that. Yet you can buy the entire company, or it's not going to tell us now, right? You bastard. You can buy it for $32 billion. That's only 8 times normal earnings. Now, I don't, just like IMAX, it's the same logic. I don't care that IMAX, look how brave I'm getting. I don't care that IMAX has an unknowable PE because they're losing money. IMAX's financials, I'm sure, are a disaster. The quarterlies are anyway. Whatever, it is. I mean, obviously, in fact, I remember we were talking about it the other day. They lost like $30 million in the first quarter, and they lost 15 million in the second. But to me, I'm like, or maybe it was 15, 25, but whatever it was, the point for me is they lost half as much money in the second quarter. The second quarter was worse than the first quarter as far as the lockdown goes, but they pivoted and adjusted and stopped bleeding. Not totally, but they stopped bleeding to a large extent. I consider that great. I consider that performing well during the virus. Of course, they're going to lose money. They're closed. They're totally closed. So, of course, they're going to lose money. They couldn't possibly have cut all their operating expenses immediately to reflect the zero revenues that are coming in. But they did quickly turn around, cut half their expenses, and kept the thing going. I consider that great management. I think they did a fantastic job. It's very painful and very hard to cut things down in a situation like that. So anyway, so IMAX is another good one, but they took off already, like I said. But anyway, same logic though. I said, I don't care. When we were looking at IMAX here, IMAX. Okay, so when IMAX was down here, I was saying, I don't care. Not there. Where is it? It's down here. $10 anyway. So down around 10. So I was saying, I don't care that they're having a bad year, because they're having a bad year due to something that has nothing to do with the way they run the company, has nothing to do with how much money they make, what their prospects are, how they're going to grow in the future. If you're a long-term investor, none of that crap should matter to you. But you also, so in other words, you have to know what to pay attention to, but you also have to know what you're going to ignore when you're doing evaluation. These are one-time problems. That's why it's such a wonderful time to pick up stocks. That's why we had so much fun buying stuff a few months ago, because it's like, these are one-time problems. This is not going to be forever kind of thing. I mean, it could drag on. We could always be much more virus conscious. We could always do much more social distancing, whatever, but it's not forever. People will go back to do it. In fact, I predicted in March, when the virus was hitting us, I predicted that we'd be back in the movies in July. Now it turned out we tried reopening and it didn't work out, and then that stopped. And now even so, even though the first reopening failed, we are now still opening up movie theaters again in America. China already open because they've got their virus pretty much under control. Europe is starting to open movie theaters. We are the worst. We're the ones that are most behind, so we haven't really opened ours yet. But it'll come. And not as bad as I thought, but it'll come. But the point is, what a great thing to buy then. It wasn't their fault. And same thing for Walgreens. People are going to come back, and people are going to buy drugs, and people are going to get the subscriptions. And frankly, if every single person in America is going to go get a flu shot, and Walgreens and CVS give you flu shots, that's probably a good reason to invest in them too. There are going to be a lot of people hitting those stores. You can't get a flu shot online. Needles don't come out of your screen and give you a flu shot. You have to go somewhere and get a flu shot. And people will go to their drugstores. If that's where they're giving you flu shots, that's where people are going to go. And then we got cold and flu season coming up, and people are going to want supplies. And anyway, it's not a one-time thing. It's generally a great business. They generally make $4 or $5 billion a year. And you can buy them for, I forgot, $42 billion, right? No, 32. No, it's $32 billion. That's a crazy low price. It's a permanently crazy low price. It's always going to be a crazy low price. Therefore, I like it as a long-term bet. That's one I can strongly get behind. Another one of my super value deals is Macy's. Same reason I've been liking them for a year. They are too cheap. This number here, 692, is probably about $3 billion. I can't believe I'm going to do this again. It's probably $3 billion valuation, $2 billion valuation. Their real estate, their store in Manhattan is an entire block. Macy's times, not Times Square, Macy's Herald Square, that's what it's called. Herald Square. This. The world's largest store. It is the whole block. It goes from here to here. That's the short blocks in New York, and then we have the avenues all the way down there. So it's not a square block. If your city has square blocks, it's not like that, because New York's blocks that's a normal city block. Like the streets are this wide, but then the avenues are twice as big as the streets. And that's how big Macy's is. All the way down there, it is the world's largest store of any kind. And it's like 7 stories high. In that part of Manhattan, well, I bet we can ask Google that. Macy's Herald Square value, square valuation. $3 to $4 billion, just that store. Now, they're not going to sell that store. Oh, what's that? Oh, here you go. Oh, I like that. How do we get that picture? Oh, here we go. Oh, how nice. See, it's another cool thing about Google. You can find more stuff on what you're talking about. Evaluation of Macy's properties. Maybe. Story continues. Yes, I want the story to continue. Oh, freaking Yahoo again. I'm like, why is it so slow? Because we're back to Yahoo. That's so funny. it going to happen? Wow, this thing's horrible. What went wrong with these guys? I just want this one picture. Oh, it says from Yahoo you can't pull it. No, it's not working. Nope. Not going to come up. All right. Take my word for it. Herald Square, $4 billion. And this was in 2003. Downtown Macy's, another big store, $3.3 billion. Something Mall Macy's, I can't read that. $8.8 billion. Oh, I see. This is other owned malls. Oh, okay. Owned mall Macy's, it says $8.8 billion. Leased mall Macy's in, I'm not sure what the difference is because I didn't read the whole thing. $18 billion. And by the way, look at what they're saying for a net square foot, $76 a foot in Manhattan. Are you kidding me? $76 a foot. So they're giving very cheap prices, $7 a foot, $8 a foot. These are crazy low prices. Bloomingdale's. They've also got the Bloomingdale's $1 billion, blah, blah, blah. So this guy came up with $20 billion worth of real estate that Macy's actually owns. It's an asset of the store. Okay. So yes, they have debts. They're a department store. That's how department stores work. They have debts. Oh, that's cool. Look at that. That's from back in the day. That's when, look how it dwarfed Manhattan back in those days, though. That's so cool. Look how it dominated back then. That's very cool. I like that. Wonder they got a further away shot. Can you imagine how impressive that must have been in the 30s? That's crazy. So, what was I gonna say? Oh, anyway, so that's the whole basis of Macy's, though. This one store, and by the way, so what they're going to do with Macy's is they're going to build. They want to build another 7 stories on top of the 7 stories, and they're going to use that for commercial space, like commercial real estate, for offices and stuff. Now, what a great office, because also at the foot of this Macy's, in fact, like right there, you can walk into one of the main train stations. Herald Square is a huge train intersection, and that has an express link that goes right to Times Square from 34th Street and Penn Station, which is Madison Square Garden. So it's all right here. You've got Penn Station over there. You've got the Herald Square interchange. You have Times Square is over that way. It's the best location in New York by a mile. That's why they built it here. I mean, think about, in context. You think about this and what it was compared to this is all of New York. This was the biggest building in New York when it was built. It's incredible. And it still is the world's largest store. No one's ever built a store bigger than this. And it just dominated Manhattan. So it still is. So it's still a gigantic thing. They own it. Obviously, they own it. They've had this thing for 100 years. So they don't owe any money on it or anything like that. So what they're going to do now is borrow some money, though. Build this office building on top of it. That'll bring them in an incredible amount of rental income. It's going to be very, very valuable space because you can't possibly be in a better location. The tunnel is right here, the Lincoln Tunnel that takes you right out to New Jersey with the trains. So you're at the train station, you take the train, you go straight to New Jersey. There's a thing called the Path, which is a bonus train that's just for New Jersey. It takes you to Jersey. All the people who live along the Hudson River use the Path train. Anyway, it's an incredible piece of real estate. It's probably worth much more than what they ascribe it to. And these guys are going to not sell it. They're going to turn it into an income-producing property where it'll probably drop about $500 million a year to the bottom line. And you're talking about a company being valued at $2 billion. So, yes, they got hit by the real estate thing with the online real estate boom with Amazon has hurt them. Obviously, the virus is totally killing them. All these things, there's a lot of hassles, and that's why they're cheap, but they won't stay cheap forever. This is a ridiculously, stupidly low price for Macy's. So now, the difference between Macy's and Boots, though, I don't believe Boots can possibly go bankrupt. I think Macy's could go bankrupt. just because negative sentiment can drive a stock down and then cause them to have debt problems, and Macy's carries a ton of debt, Walgreens does not. Therefore, when push came to shove and I'm thinking about what I should be recommending that I'm going to put my name on, I decided that I was going to make that going to be Walgreens instead of Macy's. But I got to tell you, that was a struggle for me trying to decide that. Then last week, of course, for the first newsletter that we wrote, I picked Northern Dynasty. And you say, gee, Phil, how would you pick such a risky, crazy stock, a risky penny stock for your first recommendation? Isn't that a coin flip? And it's like, no, it's not a coin flip. It was Northern Dynasty often dips down because there's rumors that they're not going to okay the project. But I got to tell you something, that project has been on the verge of being not, the environmentalists and the Obama administration, for that matter, with Biden, for 8 years tried to kill this project. And you know what? They couldn't kill it. You know why they can't kill it? Payoffs. No, but besides the payoffs, the reason they couldn't kill it is because it's not really that bad. It could be bad for the environment. In other words, the potential danger to the salmon fisheries in that area, which is half of Alaska's total salmon, the potential, if something goes wrong, is catastrophic. You would completely decimate the salmon fisheries for decades to come. You would ruin Alaska's salmon fishing, cause tens of billions of dollars of damage. No question about it. Horrifying potential catastrophe. The kind of catastrophe you would call Charlton Heston in for. You know, it's like it's really epic biblical disaster if anything goes wrong in a mine like this. If it leaks and it spills and the chemicals leach into the groundwater and end up going into the rivers and the salmon all die, you are not going to be able to fix that. It can wipe out a species basically. But in reality, they have been able to, for 10 years, even with limited resources, have been able to say, yes, but these guys say this, and this one says this, and this mine over here does it, and this mine over here does it, and this mine over here does it, and they operate for, they've been operating for many years with all these protocols in place, and it can be done. It's not that it can't possibly be done safely and effectively. It's that the danger of it not being done safely and effectively is horrifying. By that logic, you would never build a nuclear plant though, right? Because the consequences of improperly doing it are catastrophic. So there's plenty of case law on the books, environmental law, everything else, that says, yes, you can build something that is scary environmentally if you do it correctly and take proper precautions. NAK is, of course, saying we are going to take proper precautions. We are going to build this thing the right way. We're going to make sure that we are making sure every drop of water is accounted for. Nothing's going to spill out into the environment. We're going to test the waters constantly, blah, blah, blah. Now, in reality, they're not going to do half of that stuff, and it's going to be a disaster. But that's not really what we're investors. We're not worried about that right now. We're not making it happen. It's going to happen and we're betting on it. That's all. It's horrible, yes, but that's the way it works. So it just so happened that last week, this was the weekend on Friday. So last week on Friday, they got bad news. I thought it was going to open up at 80 cents on Monday. So I made a play for 80 cents. It turned out it opened up down here at like 65 cents, and it really didn't do much better during the day. There was no real period when it was actually open that it was over here. But it worked out. So it worked out great. It was easy to pick up for less than we thought. It popped up quickly. We were easily able to sell the short calls. And our net entry is like 35 cents or something like that. Like the net entry we got because we sold the call. Yeah, we bought, even if you bought the stock for 80, you sold the calls for 45, the $1 calls. So we're in for net 35, getting called away at $1 with a 65-cent profit. Yeah, of 45. Sorry, it's net 45. 80 minus 35 is 45, right? So net 45. So we're in for net 45. We get called away at $1 with more than 100% profit, and all it has to do is be above $1. So I'm like, I'll take that play. That's the best play I see this week. What am I going to put in a newsletter? I'm going to put the best play I see for the week, right? That was the best play. I know the stock well. We constantly buy it and sell it all the time. We sold it when it hit just about 250. We got the hell out. We took a lot off the table, kept some in though, but it was all paid for. It's all zero basis on this stuff. When it comes back down again, we bought more again. Stocks go up and down, and especially when you're playing in penny stocks, they go up and down. If you're not going to buy it when it's down, why are you in it? But you got to sell when it's up too. Usually with a penny stock, I try to buy like probably twice as much as I really want in the first round. So like if I get a nice low where I say it's like a low where it's been holding. So let's say I was watching it this long and then it comes down to 42 and I say, okay, I'll buy it at 45. I might buy 1,000 shares at 45. It's only 45. That's only $450. So whatever. But I might buy 1,000 shares at 45. But then when it gets to 90, I'm going to sell half. And you know why? Because then I got 500 shares at 0. If I buy it at 45 and it goes to 90 and I sell half, I own the rest for what's left at 0. Now it's free. That's it. I'm done. I really could basically close the books on this. I expect it to be a 10-bagger. I wouldn't be going into a penny stock if I didn't think it was going to be a 10-bagger at some point. But I expect it to be a 10-bagger. I bought it at 45. I was prepared to double down if it went to 25. If it dropped about 50%, I was going to double down on it at 40%. But it didn't double. It didn't go down. Instead, it goes up to 90, and I doubled. And I would be a moron to not take half off the table. Now I got a free cost basis. So now my cost basis is 0. Now it goes back down again. It gets below 40 again. I double down at 40. And my cost basis is not 45 anymore. It's 0. So now I got 500 at 40. I buy 500 more. I got 500 at 0. I buy 500 more at 40. What do I have now? I got 1,000 at 20. So now it's at 40 already. So I'm not going to get half off at 40. That doesn't make any sense. It's already at 40. I have 1,000 at 20. It's already doubled from my basis. But same thing. So I watch it. It doesn't go back below 20. It doesn't go back over 80. But I do want to get out now at 80. So then when it goes back to 80 over here, I would get half out again. And then I watch it. What we did is we didn't do that, though. We were kind of greedy. We stayed in. And but then when it hit 250, when it got towards 250, I was like, this is crazy. And I did, when that happened, I said everyone to put a stop in the thing at $2. Because why would you let that get away? That was insane. And I said, at least take half off the table. Why would you not take half off the table? When your basis is 20 cents and it's at $2, that's your 10-bagger right there. So you take that off the table. Now your basis on what's left is obviously way below 0. You made 10 times your money and you still have half the stock. So now it goes back down again. And when it comes back down, we just buy another round. And now our basis is like 30 cents or 35 cents or whatever the hell it is. And then what do we do? And then what does that mean? If our basis is now 35 cents or whatever, when it goes up to $1.40, we're going to get half off the table again. And we just keep making money. It's like a cash machine that keeps paying you out. But it's because we're not greedy and we take money and take profit when it comes across. You can't just sit on things and wait for them to go up for you. They don't do that. They zigzag. I mean, sometimes you can be unbelievably lucky, but you don't play to be lucky. Play to be good. Play to be smart. You can be smart every day. You can only get lucky some days. Every day you know how to be smart. But not if you don't practice and not if you don't pay attention. Let's see. So how is Maxon spin-off completed now affecting SunPower option positions? I don't even know. I do know one thing. I'm glad we didn't sell it. Look at SunPower. We got free Maxon, but look what happened to SunPower. They went through the roof. I'm so pleased. We were talking about possibly getting out of it. I was like, I don't know. I like it. I like SunPower. I like the spinoff. So let them split the stock. What do we care? Turns out fantastic. So all we did was get extra shares of Maxim. That's the way the spinoff worked. We didn't lose anything. We gained Maxim. And I got to put that in the portfolio. So somebody needs to remind me that we have to adjust it at some point. And Mumpman says, so they're like the mafia. I guess he's talking about the oil guys. Yes, I mean, they really want to be like the mafia. I mean, they're manipulating the markets, but so do a lot of people. So does Goldman Sachs. They're like the mafia. They're more like the mafia. You don't leave Goldman Sachs. It is like the mafia. You leave Goldman Sachs feet first, basically. Or you go to the government like Mnuchin. So Mike Mitchell Brown says WBA. Okay, that's a good start. Then he says WBA hired the old CEO. Oh my God, yes, that's a horrible thing. That's exactly, yeah. That was a oh, Ian said that. Yeah, so Walgreens hired Rite Aid's CEO because their CEO left, and now they hired Rite Aid CEO. And usually you get a new CEO and stock goes up, but Walgreens got a new CEO and everybody panicked. It's Rite Aid CEO, and he drove that company to the ground. I don't know what they're thinking. I really don't. Except maybe because he was Rite Aid CEO, he does understand how to. He knows he's a guy who maybe I would say if I'm the Boots guy, who really runs things. Walgreens Boots is really run by the British part of the company now. So if I'm the Boots guy and I control Walgreens Boots and I need an American CEO, I want a guy who's going to do what I say. I don't want a guy who's out there thinking for himself and making up his own things and whatever. And in that case, the Rite Aid guy might be the right guy for him because he might say, okay, here's a guy who's not going to give me crap because he already wrecked one company. He's going to be happy to have a job. Here's a guy who understands when I tell him something, he understands it. So in other words, he knows all the nuances of the business. He knows the internal structural things. He has CEO experience, even though it's even though he's bad at it, he does have experience running a pharmaceutical, running a drugstore company. And he's probably going to be willing to just, be your yes man, which is what you want. If I'm in England and I got to have some guy be the American CEO, I want a guy who's going to absolutely do exactly what I say all the time. And I think that might be the right guy from that perspective. So, it seems like a terrible choice, but it may not be a terrible choice because you really want the one guy to run everything and get what he wants, because Boots is a very, very well-run company. But we'll see. We'll see how it works out. JC, I got to go soon too. Any thoughts on GE? There are lots of problems. Yes. No, we gave up on GE. And again, GE seems like GE is what they call a value trap. It seems like it should be worth more, and it seems like they should have a lot of possibilities, but the reality for GE is they just are never, ever able to get it together. They are constantly blowing opportunities, mismanaging their resources. It's a shame. It really is. And I tried very hard to be enthusiastic about GE at a certain point, and we were just so thrilled to get our money back and get out of that thing eventually. It is just, unfortunately, very poorly run. I mean, they've taken one of the greatest corporations in history and run it into the ground. They spun off the wrong divisions. They got out of the wrong things. They made a lot of costly mistakes. They never capitalized properly on the things that they should have capitalized. They got rid of good divisions like Comcast, effectively, like NBC Television, everything they used to own. That was a winner. They got rid of that. They got rid of their commercial finance division. They got rid of. That was insane. That was where all the money was coming from. We had the 2008 crisis, but they rode that out, and then they decided, oh well, commercial financing's too risky. We're not going to do that anymore. Meanwhile, that's where all the money was coming from. So they got, they're big on infrastructure, they're big on energy, aircraft. Oh, they kept the aircraft division. They make jet engines for planes that don't exist because Boeing had to ground their entire force. So what a disaster, right? So they make engine. They're supposed to be making huge money on the 737s, and of course that didn't work. Is there something there? Yeah, there is something there, and it's possible they could turn things around again. But I just think the management's just so awful, and it's not just the management. It's not like you can fix it by a person. It's the culture, because they all worship that idiot Jack Welch and some of the other guys that came after him, and basically those people wrecked the company with their egomaniacal bullshit of how to run a company and how things should go and so on and so forth. You ever watch 30 Rock? Alec Baldwin plays a top GE executive, and it's a good parody. Really, it's very spot on as far as like what's wrong with GE, like why they're like idiots, and the way they run the company and the way they all, it's like a cult. It's a management cult, and it's not necessarily a good thing. You just like Harvard MBAs. I mean, Harvard MBAs also they can be terrible. They can wreck a company. GE's a little bit like that also. I mean, GE's just they have a certain way of doing things. They think it's the best way. They don't want to hear anything else to the contrary, and they just run a company into the ground following what they think is the right thing to do. So it's just not going to leave. That culture is not going to disappear. It's just embedded too deeply into the company. Yeah. And frankly, that's what's good about Apple is the cult of Jobs and the innovation and the perfectionism and so on and so forth. That's a good thing, and it allowed Apple to transition well when Steve Jobs left. But that was a very different company. Who else is a good example of that? Oh, I just thought of somebody I couldn't. Oh, well, anyway, so the corporate culture. I mean, corporations tend to have cultures, and some are good and some are bad. And there's a certain way of looking at things that can be very successful, but sometimes the founder dies and doesn't leave a culture behind, and then the company has an abrupt shift and it wrecks everything. But with Apple, it was a good culture, and GE in this case is a very bad culture. So I don't think I'd really be jumping all over that. Yeah. So anyway, so GE, I just can't get behind it. It's too scary. What are they at anyway? I don't know if they make enough money to cover where they're at. 50. Wow, that's so sad. $55 billion. 4-cent dividend. Oh, it's so horrible. It's like I mean, I used to love them. I really did. They were such a good company. Never liked Welch, but I like GE. But he was just there too long. He poisoned the company. Look at this crap. Look at this. Minus 6 billion, minus 22 billion, minus 5 billion. It's only a $55 billion company. You can't lose 10% of the value of your company. That's crazy. So anyway, no, thank you. And I'm a GE lover. I mean, back in 2008, I was banging the table on these guys. I was like, GE, are you kidding me? Let's buy GE. It's so cheap. Not anymore. All right, I got to cut this short now. Randy says, doesn't Trump Jr. not like the Alaska project? No, Trump Jr. is a kiss-ass bullshitter, and it's how they're trying to appease everybody at the same time. So Donald Trump says this project should go forward, and his son goes, oh, I don't know, there's a lot of fish. But that's just to appease this. It's tricky in Alaska because a lot of Republicans are also very deeply concerned about the salmon fishing and everything else. That they make their money that way. So there's rich people on both sides of this, and that means they don't know which side to take. But Donald Trump, please, you know how many pictures there are of Donald Trump standing on dead animals? That dude is not an environmentalist at all. He's a hunter, basically. So anyway, what else? That's it, I think. So other than that, not much going on. Let's take a look at the charts. Oil still down in the dumps. Could have actually held on, but you don't take a chance. When you make good money, you just get the hell out and take the money off the table. Oh, how's gasoline? Gasoline's back down, but not low enough for us to buy more yet. But we do have that one long, and we'll see how that goes next week. But by the way, I'm sorry. So I'm totally going to take the money off the table if it makes it's $420 per penny per contract. So we only have the one contract, so this would be $420. And so if it hits around, if we get up to like 120, I'm sorry, 122 would be $800. So around 122, I'm going to be very happy to take it off the table. If it plows over, that will become my stop. But you see this W, the most I would ever hope for is for this W to be formed. See that? You got like a W coming. So maybe we'll come down here and I'll double down. And then when it comes back up, anytime it's above 122, if it fails, then we get out. If 122 fails, and if it goes above 124, that'll be my next stopping line. And I certainly don't expect it to be higher than 125. So I would be thrilled to get out at 125. I'll be thrilled to get out at 122.